Welcome back to our channel, your place for financial tips and money news. Have you checked your SNAP balance recently and noticed something different? Or maybe you received a confusing letter in the mail. Don't worry, you're not alone. We've got the answers. Today we're diving into the most important SNAP benefit updates that started this September. These changes might affect how much you receive, what you need to report, and even how you apply for SNAP. Whether you receive Social Security, SSDI, SSI, or VA benefits, this information is for you. So grab a snack, settle in, and let's get started. But before we dive into those changes, here's a quick request. If you found value in our videos, please hit that subscribe button and turn on notifications. It helps us reach more people with important money updates like these. Also, give us a like if you appreciate the information we provide. Your support means a lot and helps us keep bringing you valuable content. Thank you. Okay, let's jump into those changes starting with stricter reporting rules. First up is a rule change that many SNAP recipients might not know about: stricter reporting rules. This might catch you off guard, but starting this month, you all need to report any increase or decrease in your monthly income within 10 days instead of the previous 30 days. That's right, a shorter time frame, and this applies to any change over $25. To illustrate, if you usually get $200 in monthly food stamps, but receive $275 next month, you'll need to report that extra $75 within just 10 days. In contrast, if your benefits drop from $200 to $175, you also need to report that $25 decrease within 10 days. Previously, you would have had 30 days to report these changes. This change affects various situations like starting a new job, changes in Social Security payments, or support from other sources. It's crucial to remember that failing to report these changes promptly can lead to penalties, such as benefit reductions or even termination of your SNAP benefits. So it's important to stay organized and set reminders to avoid missing these deadlines. You can contact your local SNAP office or visit their website for detailed information and forms related to reporting changes in income. Remember, staying informed and proactive is key to ensuring you receive the benefits you're entitled to. Next up is a change that many low-income individuals and families dread: asset limits. Now, while the maximum asset limit for most households remains at $2,250, stricter enforcement means that even small savings in your bank account could affect your eligibility for SNAP benefits. Here's a breakdown. Generally, SNAP considers several types of assets, such as bank accounts, stocks, bonds, and certain property. For most households, the limit is set at $2,250 in countable assets. Now let's move on to a positive change: simplified applications. Good news, everyone! Applying for SNAP just got simpler, especially for those who receive only one type of income. If your household relies solely on SSI, Social Security, or VO benefits, your SNAP application will be shorter and quicker to process. This means less paperwork and faster approval times for your SNAP benefits. It's a welcome change designed to make it easier for eligible households to access the food assistance they need. To take advantage of this simplified application, ensure that your household's income consists only of SSI, Social Security, or VA benefits. If you receive other sources of income, you'll need to use the standard application. With this streamlined application process, you can start receiving the food benefits you deserve with less hassle. Now let's talk about another positive change: increased utility allowances. Utility allowances have been increased to help low-income households cover their utility costs. These allowances are designed to assist with expenses like heating, cooling, water, and other essential utilities. Now let's break this down further. First, understanding utility allowances. Utility allowances are monthly payments that help cover the cost of essential utilities. These allowances vary based on factors like the size of your household, the climate you live in, and the types of utilities you need. The amount is then deducted from your total monthly expenses, which determines your eligibility for SNAP benefits. How the increase helps. The recent increase in utility allowances provides much-needed relief for low-income households, especially those struggling with high utility bills. For example, if you live in a cold climate and use electric heating, you may see an increase in your allowance, helping you manage your energy costs during the winter. Similarly, those in warmer areas may see an increase in their cooling allowance to help with air conditioning expenses during the summer months. It's important to note that these changes are designed to ease the financial burden associated with utility costs, ensuring that low-income households have additional support in meeting their essential needs. Next, let's discuss medical expense deductions. You might be able to reduce your income when applying for SNAP by deducting certain medical expenses. These can include costs for medications, doctor visits, therapy, and more. To qualify, you need to meet specific criteria, which we'll explore in detail shortly. It's crucial to understand that these medical expense deductions can significantly impact your eligibility for SNAP benefits. By reducing your countable income, you may qualify for higher benefit amounts, or even become eligible for SNAP when you wouldn't have otherwise qualified. However, it's important to note that not all medical expenses are deductible. There are limitations and specific rules that must be followed. For instance, expenses related to dental or vision care, along with those for cosmetic surgery, are generally not considered deductible. Additionally, you won't be able to deduct expenses covered by insurance or other sources of payment, such as health insurance or a flexible spending account. To qualify for the medical expense deduction, your household must spend more than 3% of your adjusted gross income on medical and remedial care expenses. Adjusted gross income includes your income from wages, interest, dividends, and other sources. If your medical expenses exceed 3% of your adjusted gross income, you may be eligible for the deduction. However, there are some exceptions to this rule. Households with a member who is blind or has disabilities may have a lower threshold of 2% of their adjusted gross income. Furthermore, if your household has an elderly or disabled member, you can deduct additional amounts for those individuals. It's essential to keep detailed records of your medical expenses, including receipts and documentation of payments made. This will help you accurately calculate your expenses and determine your eligibility for the deduction. When applying for SNAP, it's important to mention your medical expenses and inquire about the possibility of a deduction. Providing the necessary documentation can help support your case and potentially increase your benefit amount. It is advisable to keep copies of these documents for your records and to provide them to the SNAP office if requested. We hope this information has been helpful, and we want to remind you that accessing government benefits is your right. If you think you might be eligible for SNAP or other programs, don't hesitate to apply. While some people might discourage you from seeking these benefits, we encourage you to explore all the options available to you. Everyone's situation is unique, and you might be surprised at what you could receive. We're here to support you on your journey towards financial well-being. Stay tuned for more updates, and don't forget to like, comment, and share our videos. We appreciate your support and look forward to serving you again soon. Thank you for watching.